Thank you very much, Mr. Chairman. Mr. Davis, I said a couple questions. First, how will an increase in the SBA leverage limits for SBICs as proposed in the legislation that we've introduced, the H.R. 3219, as you had mentioned, how will that affect the ability to provide capital to more small businesses?
Well, what happens, so you get fund managers like ourselves. This is our first fund. It's a $70 million fund. If we're successful, and I hope we are, and I'm confident we will be, we'll go out for a second fund. We'll probably be able to raise more capital in the second fund, so our family of funds can start bumping up into an aggregate limit that the SBIC program currently has. In addition, there are single aggregate limits, and so there's a lot of successful fund managers that start in the SBIC program, and then they graduate out of it and move on to a non-SBIC program. And as they move out, they may or may not stick with small business. They may move on. So by expanding that family of funds limit, you will keep more managers dedicated to small business.
Thank you. And you had mentioned, I think you have $70 million of available funds, and I think you had 7 loans out to 5 companies. How much of the 70, for example, would you have used up in those loans, approximately?
$12.3 million. So we're making, again, we're on the small end of the range for SBICs, and I think that's a really good thing, especially for our market. There's a lot of small business owners that don't need $10 million or $20 million. We're making, our average loan size is about $1.8 million, and we've got a $500,000 loan. It was our first loan. It turned out to be a great loan. The company now has made 2 subsequent acquisitions, and they've doubled the number of employees they have. So
that's great. Now, as far as the, I think you said you had about 350 companies that you had looked at.
Correct.
Those were actually applications that they'd gone through the process, or is that what it was, basically?
Yeah, we manage a pipeline database, so every transaction that we evaluate is logged and entered. So we will have received information on the company. If we just get a phone call and it's not a fit, we don't enter it into the pipeline. So I think we put in our business plan to the SBA that we would review 200, 250 business plans in a year, and it's almost double that.
Okay.
And the other interesting part is we thought we would get a lot of just no right out of the gate, but we're not seeing that. We're seeing a lot of companies that are making money, that have a business, that deserve capital. Now, we pick and choose the ones we think are best for our fund, but we're seeing a high percentage of very viable candidates.
What were the other ones missing or wanting? If there were only 7 loans and you had, 350 applications, and they were good, what?
It just may be the structure. It may be the business. Again, we've got private investors, so our job is to take the best of what we see, and we do that. It could be we lost it to a competitor. Somebody else saw it differently than we did and was willing to price it differently. There's a whole host of, we have some bias. We've been in this industry a long time, so I've seen certain industries be good candidates for loans and some be not quite so good candidates for loans, and so we make that distinction as well.
Okay, thank you. This is a little broader question, and I'd be happy, anybody who might want to take this one on. There's been a lot of talk lately, whether it's the President's jobs bill or talk that was related to the debt ceiling debate that occurred last summer, and various things about increasing taxes in one capacity or another on investors, or the top 1% are paying their fair share, but I don't think it's really the top 1% they're talking about. They're talking about a lot bigger percent of the people than that allegedly isn't paying their fair share. What effect would actually increasing taxes, especially in these economic times, what sort of effect would that, do you believe, have on the economy overall and small business investing in particular?
That's actually a topic that we watch in the banking industry quite closely. We were starting to see an increase in our application volume in the summer. And then when the media started paying a lot of attention to the debt ceiling discussions that were happening, you could literally just watch the application volume just drop. And so what's happening is small business owners are tuning in to anything that creates a level of uncertainty and they're responding to it by holding back, maybe sitting on the sidelines, not expanding, not hiring new people. They've learned to do more with less because they're just not sure of what's happening. So anything we could do to keep certainty around it. That's taxes, that's any regulations, that's anything that's coming out that creates a level of unknown. They're doing a wait and see, and that's not helping us to get them motivated to get back in the game.
Okay, thank you. Anybody else, or Mr. Chairman, did they have time to answer it if anyone wants to, or are we?
I would just chime in. We hear the same thing from our business members. It's just the uncertainty, whether it's taxation or regulation, and it just, it puts them more on the sidelines from a borrowing, expanding perspective. So, we definitely hear evidence of that.
Thank you very much. I yield back, Mr. Chairman.